Hey guys, this is Tim. I'm making a quick video here because over 4 posts and over a week, nobody understood the differences between Obamacare and TrumpCare. So I'm here to give you some information on generally what everybody takes these two as. And I want to give you a quick history. And what ended up happening was millions of Americans were declaring bankruptcy, and the primary cause was because of health conditions. And so they would have medical bills in the tens of thousands of dollars, not be able to afford these. They'd go bankrupt so they wouldn't have to pay. And the reason for all of that was because they get diagnosed with something like cancer, and the insurance companies would know that a diagnosis with certain types of cancer is going to cost them $20,000 to $50,000 per member. Nah, we're just going to reject and deny all of those folks. And so what it ended up happening is they'd get rejected, they'd get denied, they would have no health insurance, they would still go to the hospital, still get their treatment, but have to pay $50,000 out of pocket. Most people couldn't pay that, and so they'd declare bankruptcy. This was hurting the economy significantly, and it would, cause people death sometimes because they weren't insured, felt like they couldn't go to a doctor, didn't go to a doctor, and had less good health care. And so what ended up happening is Obama pushed for some legislation, didn't really get through, got revised a number of times. Now we know it as consumers as healthcare.gov, the actual legislation, of course, being the Affordable Care Act. We call it the nickname Obamacare. So the bullet points regarding this are it accepts everyone. So regardless of, cancer, heart attack, stroke, $500 a month medications, whatever it is, they have to accept you by law. Everyone is accepted, which is very nice. Obviously, when you're forcing insurance companies to take these huge risks, insure them, pay out these big, massive claims, and not necessarily get a huge extra pool of people, just these unhealthy people are now being covered. Obviously, prices are going to be higher. So when these insurance companies are paying out these huge claims on just a very small pool of people, the price goes up for everybody, unfortunately. These plans they are networked, they cover medications, everything like that. So that's the good news with Obamacare. Bad news is it has higher prices. On the plus side of the world, so they knew with all of these high prices, it's going to come with some good and some bad. And so we wanted everybody to be able to afford it. And so when it ended up being in the legislation is PTCs and CSRs. These are premium tax credits and cost share reduction. I'm going to show you a quick chart of FPL, the federal poverty level here. And what is included in this FPL is on a percentage basis. I hope you can see this. For a household size of 1, we're looking at $12,140 of income. This is based on 100% of the federal poverty level, FPL. So based on this, you're going to get a premium tax credit of the second most cost-effective silver plan in your area, which means nothing. But I want you to know, the more money you make, the higher price these are going to be, because the premium tax credit is not reducing your monthly costs. I'll give you a quick example. You can see the different 100% levels of the federal poverty guideline for 4 and 5 households there. So I wanted you to be able to take a quick look at that and understand it. When you're right at that 100% mark, so $12,000 and a couple $100 for a single individual, you're going to get the most premium tax credits and the most cost share reduction. So if your plan is $600 on a monthly basis and you're making $12,100 and some odd dollars, it's going to give you about $600. And so your premium is going to be 0 or really, really close to 0, depending on the plan that you pick and your options that are available in your geographic location. Same with the cost sharing reduction. What this is effectively reducing your deductible and maximum out of pocket. And sometimes it can adjust the co-insurance as well, along with the co-pays. So really everything involved in your healthcare. And so if you had a $6,000 deductible, it might take it down to $100 or $500 or $1,000 deductible based on your percentage of this FPL. So the math on that real quick. So if you're 12,000, you're going to get the most and have almost no premium cost and very little deductible and max out of pocket. If you're at 400% of that, or roughly 48,000, you're going going to have to pay the full amount of the plan. You know, your deductible and max out of pocket are going to be $6,000 or $7,000 depending on which option you pick, and it's going to be the full boat of everything. So if you make some middle ground between 12 and 48,000, you're going to get some middle ground of premium tax credits and cost share reduction. So those are the things that are kind of in Obamacare's favor. Is we're accepting everyone, and we've got things to reduce the premium and reduce your out-of-pocket expenses throughout the year if you're not making a whole lot of money. The last bullet point there is it says it's networked. And what that means is, so here in Nebraska, you might have Medica. In Texas, you might have Molina, Ambetter, Community Health. Depending on your geographic location, you're going to have different options, but you need to see those doctors, those hospitals. You got to stay in network. So that, and they're going to, each plan is going to have a specific formulary that you need to use. You know, there are some loopholes with that, and we can definitely get into that. Make sure that you're using your favorite agent or broker when going over this information so that they can help you to the best of their ability. So what ended up happening is we've got this Obamacare thing. It's kind of cool, except we've got really high prices, especially for the older, you know, generally healthy folks that make a decent income. And so what's came out is some extra legislation, rules, repealings, etc. Now we know that as TrumpCare. And what's happened is we used to have these things called short-term medical plans. They used to be 90 days or so in duration, and these all vary by state, the rules do. So now it's more state-based, and there's more control given over to the state versus, you know, Obamacare is mostly regulated by the federal government, put in place by healthcare.gov, is administered by. So we've got some cool things. With TrumpCare, they're really looking for the healthy folks. Pre-existing is not going to be covered. So it's important to know this going in. If you've got cancer, heart attack, stroke, $500 a month for medications, you're going to pay that out of pocket. Likely, not giving you a recommendation, but likely this is one of the better options for you. So now, if you are healthy and you do earn a decent amount of income, this may be an option for you. So some other things to know about what's happened with this is now it's not a 90-day plan. Now, a lot of places, it's going to be a 364-day plan. This varies by state. So make sure you're working with an educated insurance professional on this stuff. They're also, in some states, going to be open networks. So you can work with any doctor, any hospital. Now, some are very similar to the Obamacare stuff. You've got to use their doctors, their networks, and what they're trying to do is control costs even further. There are no subsidies on this. So if you earn $13,000, you're going to pay on this side of the world the full boat of premium. So whereas if you're on this side of the world and you're a single individual making $13,000 a year, you're going to pay very, very little because of those premium tax credits, reducing your premium to almost nothing, reducing your deductible. So important things to know on all of this, but these have lower traditional pricing. And the reason for that is because they're accepting healthy people. And so those are kind of the main differences. So maybe if Obamacare was $600 or $700 and $6,000, $7,000 for deductible and max out of pocket, but you've got some premium tax credits and cost share reduction, that might play a factor. Now, these might be, you know, rather than $600, $700 a month, these might be $200 or $300 a month. So we've got the lower pricing, but you'll pay out of pocket. So if you're on a generic or a high blood pressure or, you know, something not drastic, you're going to be okay paying the $5 or $10 in addition to saving $200 or $300 on this type of a plan. So those are kind of the main differences. There are, and thank you for watching the video to this point. Here's an extra tip. There are what's called GAP plans, and they fill the gaps on both of these sides. Super important to know. What they do is there's a couple of different types, and again, make sure you're working with an expert on this. There's accident only, so if you need some type of accident hospital coverage, it'll pay up to $10,000 or whichever plan you end up picking, and based on that, it'll cover you know, and some of these are cash options. So it's not a reimbursement like your traditional health insurance. It's just, here, you went to the hospital, here's $10,000 for whatever, you know, your injury was. So those can be great options to fill your deductible, your max out of pocket on both sides of the spectrum. It's okay to use those on Obamacare or TrumpCare. There's also stuff out there, it's a little bit more expensive, but it's going to cover basically everything. So injury and any type of sickness or illness or disease out there. So it can, again, fill, you know, $3,000, $6,000, whatever type of plan you pick for the deductible, max out of pocket, co-insurance. It would cover the gap in there. That's why they're called GAP plans. And again, they work on Obamacare or TrumpCare. So if you need a local expert here in Omaha, go ahead and give us a call, 402-999-4260. If you're an insurance agent watching this video and you want to get appointed, we can help you get appointed with both Obamacare on exchange companies and TrumpCare off exchange companies. Give our team a call, 800-827-5110. Please do us a favor and share this video so more people are educated on the differences. Thanks so much.